big into the financial markets, there used to be this guy that I used to follow called Lacey Hunt. And a lot of people in the investing sphere have probably heard of Lacey Hunt. He's a phenomenal bond trader. And one of the things that he talks about is there's the four factors of production, which are land, labor, capital, and enterprise. And so when we look at these four factors, they basically make up our economy. They make up our GDP, how productive we are, because we have land. That is all of our resources. We have oil, we have lumber, all of the mining for minerals and whatnot. We then have labor. That is obviously our working capacity. That is our demographics. If we have an elderly population, we're not going to be as efficient as if we have a young population. We then have enterprise, which is our entrepreneurship, our ingenuity, our ability to be able to combine land and labor to be able to create productive assets and whatnot. And then finally, we have capital. And capital is basically the lubricant which lubricates the enterprise, the land, and the labor. And what I realized is when we look at land, labor, and enterprise, these are all kind of, if you want to create change in an economy, they take a long time to kind of create change. So the government can come out and they can say, okay, we want to go try and find a bunch more resources. But the reality is that a lot of our world has been kind of stripped bare, or there is a bunch of regulation that impedes us from obtaining resources. So it's really hard for us to create change by pulling the land lever. You could then look at the world through the lens of like demographics and labor. Well, guess what? At the moment, we have a declining workforce in terms of, or an aging population. If you look at, say, China's population is meant to halve over the next kind of 30 years. US has had the slowest growth rate in terms of population in the last 100 years. And Canada is meant to see, the 60 people that are 60 and above are meant to see a 60% increase over the next 10 years, as opposed to 10% increase in 60 and below. And so what we're seeing is this aging population, which is a huge burden to society. And so you start to realize that it's really, really hard to create change when it comes to land, labor, and enterprise. Well, I should say enterprise as well. Technology, we can bet on technology, but we don't know when that technology is actually going to create change. It's still a bit of a hope. And so the quickest way to create change in an economy is through pulling the monetary lever and the capital lever. And so what happens is the governments over time have become a product of the system. The system is incentivized them pulling the capital lever because it's the quickest way to create change in an economy. And we see this. Our money has slowly transitioned from being backed by gold to then being partially backed by gold to them going to the fiat standard. And each time, it's usually during these events where the governments they need to intervene, or they don't need to. They feel they want to intervene. And the only way they can intervene, they can't intervene on a land level, on a labor level, on an enterprise level. The quickest way to create change is through the capital lever. And so we're basically seeing over time this transition from money being this thing that stores value to money being purely this thing that is used as an interventionistic method to kind of create change in an economy, but it's led to a lot of these byproducts.
So a person who's not intimately familiar with Bitcoin or many of the arguments that we hear in the Bitcoin space, they would argue, well, if the government wasn't stepping in and playing with this capital lever to stabilize markets like 2008, then we would have had an economic disaster on our hands if they didn't step in. So how do you respond to that person to lay out maybe the bigger context of what the effect is?
Sure. So it's actually interesting you say that. I was back in the UK, and I have kind of like 7 siblings that I was hanging out with. And one of them she's dating a guy that's just studied economics, and he wants to go and work for the Bank of England. And he came up with this. Well, we kind of started along this discussion, and one of his pushbacks was the reason why we've seen a lot of nations fail throughout history is because they have not had the tools or the capacity to intervene to the extent to which they need to. And I just find it such a hard, such a misguided approach, because I think sometimes we look at immediate effects, but we never look at the second and third and fourth order effects. Yes. And actually, if you step back when you look at intervention, many of the issues we face stem from intervention in the first place. So I would argue that many of these nations, whether we're talking about the Romans or whether we're talking about the British pound losing its world reserve currency status and whatnot, I would say that the reason why these situations came about is because governments started stepping in. Initially, these countries rise into power because they're offering immense value to society. But then almost that immense value creates this ego, and that ego believes, hey, you know what? I think we can create change. We can do something different. They start intervening, and that intervention then starts to distort market signals. And that distortion of market signals results in greater intervention. And so it's almost as if intervention begets intervention.
Yes.
And I would actually say there's a chapter in the book, I believe it's the 3rd chapter, where I basically talk about the 4 stages of economic ruin. And this is, I would say, how intervention kind of plays its hand is first, when you start intervening, you become misaligned to reality. And I'll give an example. Jeff Booth talks a lot about in his book, The Price of Tomorrow, how we live in a deflationary world. Technology is always trying to get more for less. Like you just need to take a look at, say, Blockbuster. Blockbuster, we used to have to spend gas driving down to Blockbuster, spend half an hour in the store, finally find a movie, spend our $8 or whatever renting the movie, drive all the way home, drive back to Blockbuster, drop off the movie, drive back home. The amount of energy that we had to kind of consume to be able to simply watch one movie. And now we've got Netflix for the same price as one movie. And so technology is always trying to drive down prices because it's always trying to get more for less. But we have a monetary system that is inflationary. So if prices are trying to fall, but our monetary system is a debt-based system where prices are rising, we have a misalignment to reality. And so when you have a misalignment to reality, that leads to stage two. And stage two is the death of creative destruction, which is if you've got these debt-based systems and deflation is trying to drive down prices, well, that means your debt is becoming more burdensome. And so corporations are going to start failing. So if corporations start failing, governments start intervening. And so as governments start intervening, what happens is you now distort natural supply and demand in the market. You distort creative destruction because you're not allowing companies that are not offering value to, you're allowing companies that are not offering value to survive. And so you're now destroying in society. If you've got a company who is offering value, they now have to compete against entities that shouldn't exist. So they're now using capital simply to compete when that traditionally or in a free market wouldn't happen. So then that leads to capital flow distortion. You start to see buyers, people who are spending their money isn't necessarily going to where they want to direct it. Or if you're looking at government intervening and they're bailing out a lot of these major corporations, that money doesn't come out of, it's not printed out of thin air. Purchasing power has to come from somewhere, and it's coming from the currency holders. And so ultimately, currency holders are not choosing where their purchasing power is going. Ultimately, it's a government who's choosing where their purchasing power is going. So then you start to see a capital flow distortion because money's not flowing to where it wants to flow in society. It's not flowing to where value is being created. It's actually flowing to where value is being destroyed. And so ultimately, those first three stages, so the misalignment to reality, the death of creative destruction, then the capital flow distortion leads to decision-making impairment. Because if we can't see what the free and unimpeded market kind of deems valuable, if we're not able to see which companies should and should not exist, if we're not actually able to see what the actual risks in society are because these companies are still alive that should be dead, then ultimately, how can we make accurate decisions as to how to move forward in a society? How can the government, the central planners, make these decisions that are supposedly meant to impact everyone to build a prosperous society? We don't even know what it is that people value, what should be thriving and what shouldn't, what people deem of value and what people don't. So I think when it comes to intervention, it completely muddies the water as to how we need to act in order to create change, how we need to act in order to add value to society. One thing I wanted to add, just to kind of the point you made, and it's interesting because we've just got, for those who are not familiar, you've probably seen what's happening in Argentina, and I can't pronounce his name. I think it's Milei. Milei has just come in, and I think this is fascinating because for arguably a long, long time, we're starting to see someone who is a lot more libertarian, free market focused that actually wants to break down central banks kind of coming into power. And I'm curious to see how this pans out, because the problem with a socialist interventionist system is socialism begets socialism. Because ultimately, as you start intervening, if someone was to come into power and say, hey, I don't want to intervene, I actually want to go through a period of austerity and try to bring ourselves back up into a free market, the majority of people in society under a socialist system are suffering. Like in the US, we have 1/3 of the population is below the poverty line. Half of the population, or something like 60% of the population, is living paycheck to paycheck. So they're always going to vote for any form of short-term, immediate pain relief. And so you end up in this system whereby if we were to go into austerity, you have to go through a period of living within our means when we've been living well beyond our means for so long. And so the thing that I find really challenging is because people are very short-sighted, they're going to see living within our means as, well, this is a problem with having a free market. This is a problem with not being able to intervene. And the reality is that it's the opposite. And so the challenge, I think, with our current system is that whether you vote Republican or Democrat, conservative or Labor, right or left, the political kind of affiliations don't really matter because everyone is actually incentivized to continue to intervene. And that's why I think until we actually change the system and realign the incentives, we'll continue down this path of excess. And when I say change the system, I think you need to change that base layer, which is the money. Because if you then realign the incentives, the politicians are actually incentivized to act in the best interest of the populace. And for instance, like we talk obviously a lot about Bitcoin, but if you were to remove the money printer from government, immediately government has to compete in a free market, just like every other business. It has to offer value to the populace, because if it doesn't, it's going to collapse and another party that is able to offer value is able to rise up. But at the moment, the government doesn't have to offer value because it's got a money printer. It can go at complete opposition to its populace and still fund operations. And that's where I think people sometimes, we get so swayed as to who we're voting for, when in reality, we're going to continue down this path until we actually change the monetary system. And I think that's where I'm now just a single issue voter, whereby I'm going to vote for whoever is pro Bitcoin, because I think Bitcoin is going to shift the incentives.
Yes. Couldn't agree with you more on that.